It does look like the discussion was, as you said, a little bit more balanced, a little less gung-ho perhaps on growth that came across from the November statement. But I very much subscribe to the view that the Fed has been in a gradual process of softening its posture, hinting that maybe they'll slow down, certainly after a December rate hike. Not thinking about stopping, but being more careful, slowing down a bit. It looks like the seeds of that were already there at the November meeting. Clearly, things have moved on quite a bit since then.
Bill, what's your take?
I agree with Krishna. Given what James just said, it sounds like the Fed is positioning itself to perhaps pause after a December hike. December hike looks like it's baked in the cake, and Chairman Powell left himself plenty of room to go up a bit or quite a bit further. I think it's always a mistake to try to view the Fed as having made a decision about a sequence or path of rate hikes or easings. They'll make a decision data dependently, meeting by meeting. But at this point, it does look like they're setting themselves up to pause for a little while and look around.
Yeah, but we're still expecting a rate increase in December, though, right, Bill? I mean, is that one data dependent or not?
Well, they very rarely historically will deliver a surprise during a tightening cycle. They just don't want to rattle the markets. So at least the next upcoming meeting is generally pretty far, telescoped pretty far in advance. And in that sense, I think December is baked in the cake.
Krishna, when we're looking at 2019, it seems there's a bit of a divergence between what perhaps Wall Street and investors think will happen with the Fed and economists think. It seems many economists, or at least groups of economists, think we're still in for 4 rate hikes. What's your view?
My best guess right now is we'll probably get 2 or 3 hikes next year. But I think, in terms of where we get there, it seems to make sense to me right now that given everything else that's going on, Powell would lean a bit on the dovish side. If the market swings a little too dovish in terms of expectations for next year, no great harm done. It helps stabilize things. And then under the spirit of data dependence, if the data does come in solid next year, some of these trade and other risks begin to moderate, the Fed can always guide the rate path back up a bit.
Steve, how many times did you say the words trade or tariff were mentioned?
It was 12 times in the discussion by the policy members. We left out the staff in our count there, and the language is pretty strong. But Melissa, if I might just for a second, I want to just throw out this other thing that they're talking about, which is changing the language, and I think that's indicative of a change in policy. Yeah. This language of further gradual increases, I think Bill Nelson might know the number of times or how far back that language dates, but it's quite a while. The idea of eliminating that, it always told us that the direction of policy is going to be further rate hikes. And then moving to language that talks about data dependence. I don't know if that's going to happen in December or happen sometime after that. But that is going to mean, I think, along with the press conferences, maybe a bit more volatility in the game of gaming out what the Fed is going to do at the next meeting.
And Bill, before we go, look, we all know that they're going to say, no, this had nothing to do with the president's criticisms of the Fed and everything, but isn't there going to be some thought inside the Fed that they want to do what they can so that they're not perceived as the bad guys if the economy really does slow down or the stock market goes south or whatever happens?
Is that for Bill or for me?
That's for Bill Nelson.
The Fed has been very clear that it is given its dual mandate by Congress and that it's going to continue to execute that responsibility, and that's the best posture that they can maintain. At the same time, I'm sure they're aware of the political pressures that are on them, and they may be all the more eager to look for other ways to tighten the economy, for example, through continued declines in their balance sheet or other changes that could be made. But even so, they're gonna do what they think is the right thing to do.
At the same time, Krishna, though, isn't this sort of an acknowledgement of the market's move in October? What the markets were forecasting was a slowdown in the data. What they were reacting to in October was in part this notion that growth was going to slow and that they're worried that the Fed was going to proceed on a preset path. This seems to back off of the notion of a preset path and also say, you know what, markets, you may have a point. You may have had a point with your sell-off.
So I certainly think that the Fed is at pains right now to make it clear that policy is not on a preset path. So every time you get a Fed speaker, data dependent, data dependent, data dependent, I think that's very helpful, reassures people there's no preset plan. But it is also worth noting, as Vice Chair Clarida said the other day, data dependence itself is not a strategy.